You're listening to the Wealth Without Wall Street podcast, where today we're challenging the conventional wisdom that paying cash is the best form to make large ticket purchases. We disagree, and here's why. Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let the handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Here are your hosts, Russ Morgan, Joey Mure, and Will DeShazer. To the Wealth Without Wall Street listeners out there who think cash is the only way, or paying for big ticket items like vacations, cars, homes, paying cash is the only way, you're about to get your world rocked. Because I'm sitting here with the idea guy, Mr. Russ Morgan, who just got back on vacation. We'll talk about that in a little while. And Mr. Joey Mure, the Italian stallion, looking in beautiful rare form this morning. How are you guys doing?
Doing great, Will.
Well, speaking of, we call you the Millinovator because you run a podcast outside of this one that is, visiting with entrepreneurs that come from the millennial generation, right? And if you didn't know that Will was a Millinovator, you would have read that on AL.com.
That's right.
By the way, for those of you who don't live in the state of Alabama, that's our number one media source.
Alabama.com, right? AL.com did a whole expose or spread on Willie D.
It was not on me. It was actually on my girlfriend, who,
fiance.
Excitingly enough, I was going to really build some momentum there. But yes, she's my fiance. So thanks, Joey. That whole story I was really looking forward to surprising and telling is now cat out of the bag. I did. I got engaged on Saturday. I'm super duper fired up about that.
That's really awesome. I mean, you've set the bar so high for people in so many ways. Like just listening to your story, which I hope you'll share it in a second. But the fact that you have your engagement on the top media source in Alabama, like spreadsheet,
it's pretty cool.
That's awesome, bro.
Well, it's perks of marrying someone who's a lot cooler than you are and a lot more reputable than you are, right? I guess you should shoot for the stars. Unfortunately,
well Joey did the same thing, but he didn't have a spread in AL.com.
That's right. I did marry somebody way cooler and more reputable than me. Just for the record, y'all heard it here first.
But look, decades ago, AL.com wasn't a thing. I'm sure Joey was in the newspaper. Don't worry.
You say decades ago?
You got married
really?
At least 10 years ago.
Yeah, I guess so. Doesn't feel like that long, okay?
That's a good thing, though.
I'm still young at heart.
Newlywed. It's newlywed still.
All right, yes, the honeymoon phase.
All right, enough with you. You're boring.
Yeah.
Go back to you, Willie D, because I want to hear just briefly. Tell me about this engagement. How you planned it, how it went down.
All right, so I could clearly talk about this for the entire show, but our clock is at 2:35 right now, and I'm not going to spin past, let's say 4. Okay. So I woke up that morning super fired up, really, really, really excited, and went down to the farmers market here in Birmingham. Haley and I go there. That's my fiance, almost every Saturday, and there is a certain vendor who has wildflowers, and gosh, my chair is freaking out. They have the most beautiful wildflowers. So I got these big bucket of wildflowers, went up to Vulcan, which is kind of the higher point, one of the highest points in Birmingham. It kind of overlooks the whole city. And my plan was to drop the flowers off and send her on a little date night during the day adventure hunt to 5 different places in which she would find one ticket of a date night that we'd had there. And there's a note and an envelope of what that place meant to us. And so
don't downplay the note, by the way.
The note was strong, but she said I totally ruined the note because I would send her a video. I was only one stop ahead of her throughout the whole day. So I was about 30 minutes ahead of her. And I'd send her a video telling her where the note was, what the place meant to us. And she was like, dude, the video was the same thing as the note. So I kind of ruined it there. But anyway, I
you didn't think through that far. I mean, it was a trial run.
Right. So I'm super fired up. They have this map at Vulcan, right? So I was going to put my ticket in each of the spots that she just was, because she could see all of the areas through the view at Vulcan, as well as vision the tickets on the map. Right? I had this awesome idea, and it all revolved around this map at Vulcan. So I get there at 10 in the morning to drop off the flowers, and I'm already over on time. And I get there at 10, and there's people dropping off chairs and tables and stuff. And I say, "You guys have a wedding here today?" "Yeah, we got a wedding." "What time is it?" 5:30. "Great. I was going to ask her at 5. "Okay, we'll push up an hour and a half. That's fine. No big deal. Where are you guys doing it?" You see that map over there? We're setting up the chairs right on top of it."
Brutal.
Great. So we changed it up a little bit. It was windy up there. The vases fell on the note, got the note a little bit wet. I dried it off. I was really sweaty. But she said yes, and that's all that matters.
Well, and
Exactly.
just research Haley Barber and Will DeShazo, AL.com, and you can see their beautiful pictures, and I'll read all about it. Because I will say, bro, that was awesome. You set the bar really high. I'm glad that I am already married, and my wife doesn't listen to podcasts, so she'll probably not know how you did this, because that's awesome. That was really cool, and that's going to give us some ideas for everybody else who hasn't done it yet that can follow your lead.
There you go.
I'm just grateful to say that I know you and that you're the man. You pulled it off, and congratulations.
Man,
isn't that great? Like, how exciting. It's coming up soon, and now we're in the planning phase, and you want to talk about paying cash for things, which was what we're talking about on the show.
Right.
A wedding is a high-ticket item, man. I mean, that's no joke, especially when you guys, Russ, you've got a lot of girls.
I've got 3 girls, and Joey has 4.
Joey has 4 girls.
We got a very expensive table here of expenses coming for weddings.
Yeah, no doubt. Well, and that's the biggest thing, as I mentioned early on in the show, high-ticket items, but it's not really what the wedding's going to cost you today. It's what those dollars could cost you in the future. We'll cover that in a little while.
No, I agree. And this is, it made me think about what we're talking about today on our show. Is you previewed the video in our earlier part. I think if you're not watching some Friday Freedom videos, I put those out from time to time. You can go to YouTube and just research Everlight Financial, which is the company I'm the founder of, and we show different clips. But in that one, I share how the trip to Colorado that we took, which is not inexpensive, by the way. Whenever, even though I was not excited about going, I had to get motivated because I had to buy 6 plane tickets. Oof, that's ridiculous. Each one of those tickets was $425 a piece.
Oof.
I had to rent a car for a week.
The swagger wagon. What'd you call it? The laundry mobile?
the grocery getter.
Grocery getter.
Yeah. My wife's like, "Why'd you rent us a minivan?" I was like, "What else you want me to rent?" She goes, "Well, we drive a Yukon." I was like, "Yeah, well, that's going to be like $2,000 for the week." I'm not stupid. I'm okay. I'm comfortable with my self-esteem to drive the Toyota Sonoma or whatever that thing was around.
Sienna.
Hello.
Whatever. I know your wife drives one, so that's fine.
That thing is a beast.
But you start adding up this stuff. That trip, and every meal with 6 kids on the road is $120 something. It is just, it's sick how much money we were spending. But in my video, I disclose how I paid for all of this stuff, and I use life insurance policies, which is no surprise to you if you've been listening to our show. I don't use any sort of Wall Street based concept. And using whole life insurance as a mechanism for our savings is one of the oldest ideas that exists, but it's not mainstream out there anymore.
That's right.
And our family uses, any large expenses, no matter if it's cars, investments, vacations, I always will take loans against those things. So I got a question this morning. Actually, I woke up, there was a question on LinkedIn. Why did you use a life insurance policy? Why didn't you just use cash? Surely you've got cash. Why would you not do that? So I want that to be our conversation today, because most people don't really think about it that way. We're constantly taught that either you borrow money from a bank or you pay cash. And I don't think people understand that they're really very similar. They just don't, one of them, they see the interest, the other one is kind of hidden.
That's right. And I think the question behind the question, as you just mentioned, is we talk about the Wall Street mindset on this show. And that is a very, it's a commonly just agreed upon thought. Everything's cheaper if you pay cash. In fact, you'll hear financial gurus, or I call them entertainers, financial entertainers, who will just beat that drum. If you can afford to pay cash, pay cash. It's so much cheaper. But why do you think that we would continuously tell people that's not the cheapest way?
Well, it may or may not be the cheapest way.
Well,
nobody's doing the math.
That's right.
But Albert Einstein would absolutely argue with you that cash is the worst thing in the world, right? He's the one who said that compounding interest is one of the wonders of the world if you take advantage of it. So if somebody knows how to take advantage of that, then they would know that every dollar you spend will never compound for you ever again.
So it's gone. It's done.
Right.
It has no ability to grow. I think you just mentioned it, Russ, when you just said the future of those dollars, over our lifetime, what those dollars could have earned is the unseen.
Right. There's the seen and the unseen. The seen is if I borrow money from a credit card and I pay them 12% interest, it's going to cost me X every time I use it if I don't pay it off at the end of the month. Right. But the unseen is if I use cash, that cash has a cost. Now, right now, people go, I don't see any interest in my account, right? There's no interest to be seen. And that's because they're saving money in traditional banks.
Right. And let's add to that. So what is somebody earning on their cash in a checking or savings account right now?
It's negative.
It's negative. It's less than 1%. So I'm going to kind of back them a little bit here and just say, yeah, it's hard to see what the loss is because you're not gaining anything anyway. If you could be earning 4, 5, 6% on a dollar, that's a legitimate cost over your lifetime.
But see, we don't think about it that way because we're taught the best place to put money is in a bank because we're safe because of FDIC. And we can go in a whole show about how FDIC, if you have faith in FDIC, you're really in trouble because less than 1 or 2 cents on every dollar that's supposedly insured is actually in FDIC,
reserves.
Yeah. And all the new Dodd-Frank Act and everything else that basically says that the government's no longer going to bail out the FDIC, which they've been bailed out so many times. It's crazy. The last time was in 2008 that now the people who have money in are going to have to actually bail in the bank, meaning they're going to have to use the deposits on hand to support all those claims that are coming. We'll get into that one day. But the key is that why are we taught to put money in banks? Is because that's a Wall Street concept, right?
Banks want your money, well, quote unquote, in the bank.
Right.
It's not in the bank.
Think of who runs the banks?
Wall Street does.
Yeah, Wall Street is the main concept of the bank. It is just another place to house money for them to use it, which is the whole reason why we're anti-Wall Street, right? Is that we want you to be in control of your money, not giving up control. And here's one thing. Think about this. When you put money in a bank, you're sitting there at the teller, and you get the little suction globe deal that comes to you, and you
the canister,
and you write your check or put your cash, whatever you're doing, and you send it back to them.
In the drive-through.
That's my favorite part. I might add.
Right. Well, and then my kids in the back are like, hey, I want a sucker, a lollipop. Dad, do you have some for a lollipop? Right? You know what I'm talking about. As soon as that money leaves your hand and goes to them, do you realize that now that money is no longer yours? It has now become truly the bank's. They have a liability to you, but it's no longer your money. Once you zip it through them to them, it is now their money, and they have a liability back to you. Most people don't even think about that. So the concept of us being in control of our money, us owning it and using it for our behalf is so crazy. But let's go back to our subject, which is, what is the cost? We're going to pay cash or we're going to finance. I will tell you they're the same exact thing, and here's why, Joey. Is that when you pay cash, you give up the interest that money could have earned. So when I put money in my savings accounts, which are life insurance policies, dividend paying whole life insurance policies designed in a way that allows me to maximize cash up to a limit, because I don't know if you know this, the government actually put limits on the things that we do that are good, right?
Right.
They won't allow me to put in up to certain amounts. I maximize those limits, and those insurance policies, you said it before, earn 3, 4, 5% in today's environment. Now, if we get in higher interest rate environments, they'll be higher than that. But over the next 30, 40, 50 years, there's a lot of interest there. So if you're saving money in savings accounts and you're getting 0 to 1%, the difference between you and me is what it's costing you every time you pay cash and I use my insurance policies.
That's right. I think it'd be great. I mean, just go through an example. Let's just say this vacation was $10,000. You just got back, bro. I might be.
Yeah, Russ just rolled his eyes, by the way.
Might be lowballing that.
But, when you consider the fact that I rode up a mountain, right? Just to drive a road up the mountain cost me $45.
And that's not including the gas that it costs you and the car.
I got in a gondola to go across this gorge, a 3-minute ride for $126.
Wow.
I mean, okay, I know.
Let's get into that business. What are we doing sitting here?
I'm going to stop the lamenting over the money that I spent. I enjoyed every minute of it. But yes, $10,000. That's the number.
I mean, people can resonate that's a
pretty
consistent
close number.
Maybe you don't spend $10,000 on your vacation this year, but at some point you probably will. And by the way, there's way more cash flows going through your hands than just $10,000 a year.
Oh, yeah.
I think we can all agree on that.
Well, the thing about vacations are they're not just the money you spend when you go or when you get or on your way to get there. It's before you even get there. I mean, for us, this is a wedding. So what do you think? We had to buy new dresses for everybody. We had to buy new shoes to go with them. We have to have the hair things to go with. I mean, the stuff that went in.
You do have some good hair things.
the things that we had to do in order to just get to be able to go on this trip. And yeah, this is not an every year trip for us. So $10,000, I'm going to take that example. I've got a little calculator in front of me. If you take $10,000 every 2 years and you spend it on a trip, and this is what the average person who's saving money just says, I'm going to put $10,000 in an account. Let's say you're as young as I am, you're 40 years old. You're going to live to 90, right? That's 50 years. That's a good round number. If I had $10,000 account and it earned 4%, just 4%, and I never touched it, it grows to be worth over $71,000. All right?
Over how long?
50 years, over
50
my
years.
lifetime.
Okay.
That's just money sitting in a savings account if it could earn 4%. And I didn't have to pay tax on it, any of that kind of stuff. Well, if I take the example of if I use that money every 2 years, I take that $10,000 out of that account and then I just replenish it over that 2-year period of time. Like literally just take out 10,000 and over 2 years, put 10,000 back in it. And I do that every 2 years for that next 50. So I'll take it out 25 times. Do you know how much money I have?
Let me know. Tell me.
I got under 22,000. So it cost me $50,000 to pay cash, even though I did the same. I just put money in, took it out, put money in, took it out, because I didn't get the interest on that money
That it could have earned.
How many
Right.
more vacations could you have taken with 50K?
Well, at least
Or
5.
how much longer could you live on your income? Yeah.
At
like-
least 5, right? Well, that's the concept. It cost me $50,000 to pay cash to do the same exact thing, where if I'm using these insurance policies the way that I'm doing it, I get that $70,000 and I still make the same payments back. I get that extra $50,000. So this is I had that question and I'm going to try to do my best to point him to this podcast and say, hey, listen to this. But the idea that everything we buy, we finance, regardless if we pay cash or we borrow the money from someone else, we are financing it. It's either an interest expense or it's an interest lost.
That's right. So let's kind of break that down. And maybe I'm going a little bit too detailed here, so bear with me. But people they don't want to borrow the money from a bank because they want to save the interest it would have cost them.
Right. They don't want to go in debt. Debt's a scary
Right.
word. A loan is a scary word.
It's a 4-letter
people.
word, right?
Yeah.
DEBT.
Right.
But if I had borrowed that $10,000 at a 3 or 4%, let's say, I mean, nowadays you can borrow money pretty cheap. We're not going to talk about mortgages today. That's probably another podcast, but we can borrow money over that same 2-year span of time. Let's say $10,000, 2 years. What's a round number on interest it would cost us to borrow that $10,000? Even if 3 or 4 or 5%.
I don't understand your question.
If I had to borrow $10,000 instead of paying cash,
Yeah.
and I went to the bank, okay,
And how long's the note on it?
let's say it's a 2-year note,
So I'm going to pay like $300 or $400.
Yeah.
maybe $300 or $400, and so am I willing to give up $300 or $400 to leverage that money to allow it to keep growing?
Well, and
For the lifetime, we just talked about it's $50,000 that we would have cost
And
ourselves,
400 every 2 years. Yeah, I'll take that deal all day.
right?
I just did the example. I'm taking your 4%. I'm putting this in my calculator right now. If I paid someone else 4% to borrow the money, and I kept my money in that account only earning 4%. So most people would say,
That's a wash.
It's a wash.
Right.
But it's not true because my whole amount of money is earning 4%, and I'm only paying interest on the little amount that I'm borrowing during that time frame as I'm replenishing it. So I do the same thing. I replenish the 10,000 every time I do it. Plus, it's costing me the $400 roughly a year for the full amount, and it's reduced down. Instead of having 71,000 if I didn't do anything, or 21,000 if I just paid cash and didn't borrow the money, I end up with right at 60,000.
Yeah. So this is a true.
So what's the difference there? If I pay cash, I end up with 21,000. If I borrow the money from the bank or from an insurance company in this example, and I let my money earn 4% because you're not earning 4% in the bank, I end up with 60 grand. So I come out in this scenario. So the guy asked me, why would I do that? Because I actually have 4 times the amount of money over this period of time, just doing things the exact same way, doing the exact same things, just tweaking what I'm doing, which is our whole concept is not, being erratic. I'm actually fully in control of this scenario.
Right. So let's break that down. There's a lot of numbers we just went over. But the basic concept is this. If I have dollars going through my hands anyway, like vacations, we've mentioned weddings, vehicles. I mean, think about college, large ticket items. These things are going to go through our hands.
Condo in Auburn.
Those things have all that opportunity that we just mentioned to grow. And what do we do by paying cash? We stop that from growing.
It's dead.
We give it no opportunity to grow. Why? Because we want to save the $400 a year. That's a Wall Street mindset, guys.
And it's scarcity. You're afraid. I don't want to give up this $400. Well, that's scary.
I don't want to have a payment.
Nobody else does this. Loan is not a good thing.
Well, just think about this. If you were a tree farmer, right? Your objective would be to grow the biggest trees you possibly could and do what with them?
Celebrate Arbor Day.
You would be to harvest them at the end, right?
Sure.
That's right.
But would you want to cut them when they're saplings, when they're small? How about in like 4 years?
Let's kill the golden goose.
No, you got to wait till they get as big as they possibly can. But see, the thing is, if you use that same analogy, people plant a seed, meaning they put money in some sort of savings, and then it sprouts up a little bitty small sapling, and then they cut that thing.
That's right.
And then they go sell it for dollars on the
and then they go plant a new tree. And they constantly are doing that with their cash. What we're talking about is literally planting the seed, waiting is the longest part. And instead of cutting down your tree that's going to have the harvest, you go and borrow the money from, the guy at the seed lot who's giving you the money. And people go, oh, you're not supposed to pay interest to anybody because one of the big financial entertainers out there says never,
don't go to debt. Pay off the debt.
Yeah, paying cash is the new Mercedes-Benz or whatever the slogan is.
King.
But having cash and having access to cash are crucial. We're big cash flow guys. Our objective is to be in control of cash. So that's why I save so much money in life insurance policies, is because it's liquid and I can access it because I want to take advantage of opportunities. But putting money in savings accounts at large degrees and constantly spending it off for everything that you said, because I just gave one a $10,000 example. And some people say, well, $40,000, $50,000 over 50 years is just not worth me doing this. I'm giving one example of 1,000 things that we will spend money on over our life.
Oh, yeah.
Just start adding an extra 40 grand to each one of those things.
Oh, yeah.
We're talking hundreds of thousands of dollars. That's the only reason I started doing this is because somebody sat there and showed me how just the way I buy cars over my lifetime is going to cost me an extra $200,000 unless I did it this way.
And you're not buying, $400,000 cars here.
No.
You're talking about your everyday life.
No, I'm just regular.
And that's $200,000. So imagine if you're buying a $90,000 Porsche every 4 years.
Imagine if you're buying a $100,000 rental property every couple of years.
Yeah.
Just think of the things that we spend money on. Imagine if you're Joey, you got 4 weddings and they're $35,000 a piece.
I just
hope that they're $35,000. Like I'm thinking it's going to be more than that.
Well,
but this is a mindset. I think that is so critical for us to challenge ourselves and our listeners here. We've been told over and over and over that cash is the only way, or it's the best way. And we have to be able to think differently. If it costs us $50,000, $40,000, whatever the number is, in one of those aspects, don't you think it's worth challenging the way you think?
Well, here's the thing. I'm going to challenge you with this then. But Joey, I don't want to have to go to a bank and borrow the money. I don't want to have to go through all the financial requirements that they're going to need of me, ask me for my P&L, that ask me for my personal financial statement. I don't want to have to go through all those hoops. And what happens if, income becomes an issue in the future?
When you borrow from the insurance company, you have none of those requirements.
Okay, well, I think that's something we need to break down. And what is the difference between borrowing from a bank and borrowing from an insurance company? Because 99% of the people who listen to the show have never borrowed money from an insurance company. They have no idea.
Right. So as you guys have heard before, and what we'll continue to talk about, my background in the mortgage business. If anybody knows the requirements it takes to get a loan, it's me. And I used to have to I was embarrassed sometimes to ask people for certain documents like, hey, give me a copy of the canceled check from 2 years ago of when you put in a check for $150 for your birthday, because the underwriter wants to know what that was from. I mean, it was just ridiculous how deep I had to get into people's personal lives just to give them a loan for a home that they were more than qualified for. So, compare that to what I know now about life insurance loans. If someone wants to borrow $100,000 or more from their policy, guess what it is? It's a phone call. Hey, Joey, by the way, can you send me $100,000? Okay, I'm going to send you a form, sign it, send it back, and we'll get it deposited in your account in 3 days.
Did that last week. I
Yeah.
took a policy loan last Friday for business expense type stuff.
3 or 4 days.
Yeah. And I'm not worried. It's not a burden on my back.
Are you sure you weren't
It's
taking
not,
a loan for something more than a business expense? Maybe like a little shiny thing that
I'd already paid for that from a policy loan several months prior, and it was
There
a
you go.
burning
He's been holding
hole
on
in
to
my-
it. He's been
Yeah.
playing this. You don't come up with 6 locations and tickets and all that stuff. That didn't happen overnight. There's some planning on that.
That's right.
Now, I realized you and me were like shiny thing, and we asked the question. Like there was no gap there. There was not a whole lot of like vacancy in that time.
Yeah,
but
well,
that's not
she
willing to-
found what she loved, and it was amazing. And so I went in there, and I got it like 10 days later. I
Yeah.
mean, I had to. You know?
I
got the approval, and that's not a purchase I'm going to make blind either. I'm not going to be like, I think you'll really like this one that you have to live forever with and look
Good
at every
call.
single day.
Good call.
Yeah.
But you go back to the control, and we've mentioned this on this episode, but people think loan, that's a negative thing,
Yeah.
right? I'll take that policy loan that I just took, and for you too, Russ, it's the same example. When do you have to pay that back?
When I die.
So when would you want to pay that back? Are you
Well-
encouraged to? And
well-
why are you encouraged to?
Yeah, well, so I think if you don't understand how an insurance policy loan works, you as Joey said, it's very simple as regards to paperwork. But really, a loan against an insurance policy is nothing more than a prepayment of the death benefit. I'm going to say that again. It's a prepayment of the death benefit. Meaning, if I had $1 million death benefit and I took a $10,000 loan against it, then my death benefit immediately is $990,000. That's it. So that's the reason why there's not a requirement and all this paperwork is because the insurance company has reduced their liability. Their liability is to pay my beneficiary $1 million, right? That's what they're holding for.
Well, what I love about that example, Russ, and what so many people think, a death benefit is extremely, extremely valuable to both of your families, correct?
Yeah.
But the time that you're here on this earth with them and that $10,000 vacation that death benefit just funded, that's almost even more important, right? The time that you guys spent together by accessing that is tremendous.
Oh, my kids will never forget me dancing on the dance floor that night. I can guarantee you
I've
that.
heard some stories. Fortunately, we don't have clips of that.
Yes, and I did decide to hold off on the NC Hammer split, and so I am still able to walk and talk to you guys today because of
Wow.
that. But
Just let that visual sink in if you're listening.
Don't do
that's
that.
big.
But we did every time I do that, I take a loan against the insurance death benefit. But you ask me, when do I have to pay it back? The answer is never. I don't have to pay it back. But am I encouraged to? And the answer is absolutely, because when I pay back that, it only gives me access to more money in the future. And when have you ever had too much money in the bank? When have you ever said, I got way too much money? And that's the only reason I constantly am making large, almost 6-figure contributions every year into these life insurance policies. But I'm constantly taking loans for all those things, whether it's vacations, investments, cars, buying land. construction on land and houses and you name it. I'm using those dollars, investing in businesses and to technology or whatever. It is just a way for me to keep replenishing it, use the money, keep replenishing it. And I don't have to, but I'm encouraged to because I'm an owner of the company. I'm actually, these companies we use are what's called mutual life insurance companies, which means that they're only owned by the policyholders.
Right.
So they're off of Wall Street.
Off of Wall Street. So they're not stock companies. Stock companies would be a Wall Street minded business,
Absolutely.
which we don't use those. We don't recommend those. We use only mutual companies. So there's the idea of it costs too much. That's absurd because I'm the one benefiting from the cost of whatever it is. I get a dividend each and every year from these companies. That's a profit of what the company does. How profitable do you want the companies that you own to be?
As profitable as they can.
As profitable as they can. So I'm okay with them being profitable because that money ultimately comes to me as a small percentage shareholder. Well, I use these policies to do the different stuff, and I have non-structured payments. So the difference is when Joey, somebody took a loan from you at the bank, you guys dictated to them what the interest rate was. You dictated to them when they had to pay it back, what their monthly payment was, what insurances they had to have whenever they had the loans, and all the other things that they needed
all
to do.
The other requirements, absolutely.
The insurance company says nothing more than sign here, send it back to us, and we're going to reduce your death benefit by the amount accordingly plus interest. That's it.
Oh, they ask another question. They ask if you want it in check or electronically deposited.
That's right. That's a tough one, right?
Oof. Yeah. Actually, I'd rather wait, go to the bank, cash a check. Yeah.
Well, no, I'd rather get a check, take it down to the bank, and have them tell me they're going to hold it for 10 days.
Exactly.
Oh my gosh.
Well, but
nothing more frustrating.
The same is true when you're making big purchases at the bank too. And it's funny. I was watching a documentary the other day about pulling money out of the bank, and this guy's like, "Dude, I need my money." It's like few $100,000. Like, "Sir, we can't give you that." He's like, "No, I need my money right now. Like, I have a cash opportunity. I need my money. We can't do that." Like, if you really believe that your six-figure or whatever is sitting in your bank, $50,000, I don't care what it is sitting in some safety deposit box at the bank, you've got to wake up to that. It's not there.
No,
it is in somebody else's repaying it as a loan, as an auto
go
loan.
watch what is it, the Miracle of 34th Street? When they came to him and said, "Hey, I need my money," he said, "Your money's not here. Your money's over at Will's house.
Exactly.
It's over in Joey's business. Your money's not here."
Because money's got to be in motion. We've talked about that before.
Well, speaking of banks, I told you I was in Colorado. And everybody knows Colorado legalized marijuana not too long ago. And so I'm sitting there next to this guy at the wedding table. And I'm like, "Hey, so, where are you from?" He says, "I'm from Denver." I'm like, "Oh, that seems like a pretty cool city. We flew into there to come to here." He goes, "Yeah, it is. It was really great. I grew up in Colorado. But up until this whole, new legalization of marijuana in the state, it's really kind of backfired." I'm like, "Well, how so?" He said, "Well, like I just recently was trying to buy a house and the prices of the houses I were buying was just absurd." He said, once they legalized marijuana in the state of Colorado, they had a ton of people who were like, "Yay, me, I'm in." And so they started flocking to Colorado.
Right.
For the industry, not for the product.
Yeah, no, for the product.
Okay.
No,
those
for the product.
same people buy it.
Yeah, they were like, "Yeah, I want in." And then so you had some entrepreneurs who are basically saying, "Okay, I want to take advantage of this marketplace." They saw a need, so they started filling the need by, they went and paid, I'm sure, hundreds of thousands of dollars to get the licenses in order to start selling the product. But he said, here's the one thing that the state and nobody ever thought about. Well, the fact that marijuana is legal in Colorado, but it's not legal in the United States, so it's not federally. So, and almost all of these purchases are cash. He said, you cannot put money from a marijuana business, even though it's legal in Colorado, in a bank. So these guys literally are sitting on tons and tons of cash and can't reinvest it into the city and everything else, which was a backfire to what they really said. "Hey, we're going to do this. We're going to tax it, and then we're going to have all this revenue that's going to be reinvested into the deal." So what these guys started doing, Joey, in order to launder their money, they just started buying up real estate. So he said the price of real estate in Colorado
Supply and demand.
has just gone boom, just skyrocketed off the charts because they have nothing else they can do with their money because the bank
That's how they
can't
clean
accept
it.
it.
So that's how they clean it. They just buy a house and then
They buy a house,
take
they
it
take
out.
rental revenue, and then they're asked by the bank, well, they're sticking in, tens of thousands of dollars every month into the bank from rental revenue. They say, well, what's your occupation? I don't know if you know this. If you ever put more than $5,000 or $10,000 in cash in a bank, they're going to make you fill out a form. They'll fill it out. Usually they'll just ask you the questions from it. And one of those questions is, what is your occupation? Because they want to know, where's this money coming from? So those guys can't go stick $100,000 in the bank and say, I'm a marijuana
dispenser,
distributor or whatever.
Yeah.
But they can say, I'm a real estate investor. And so that's where the money's going.
Wow.
Isn't it interesting? Like, I would have never thought that. And he's like, so by the way, if you know of any states that's getting ready to legalize marijuana, you may want to buy some real estate in those states because it looks like that's going to be going up. But otherwise, it's pretty interesting. Or own a safe company, because he's like, yeah, these guys own like 37, 50 safes.
Yeah.
I mean, they just keep buying safes and sticking them in their house. Or lastly, own a security detail company, because they end up basically having to live their life surrounded by bodyguards and full-time security.
But you left out a
money.
main one. You could pull a Peyton Manning and just get a ton of Papa John's. Right? I mean, he did that. He's got like 20 throughout Denver and all of Colorado. So,
well,
there's opportunity everywhere. You just have to look at it differently.
They're open late.
That's right. That's
Right.
another end of it.
That's really funny.
Well, I don't know. Hopefully we touched on the subject matter of why I use life insurance loans versus cash. And I know we'll have some of this in the show notes, and we can go into maybe shoot them some videos of the numbers and how those work. But the key is that having an insurance loan versus cash or a loan from a bank, I get immediate access, but I don't have all the requirements. And ultimately, my money continues to grow because I was going on that tree farm. What's happening is over time, my tree is getting bigger and bigger and bigger, and I'm not constantly killing the tree.
The analogy guy.
Yeah, I want to make sure my money is constantly growing. And the thing is that if you keep putting money in savings accounts and taking it out, putting it in, taking it out, you're only going to have what's left in there at the end of the day. You're never going to have the interest on that money. And that's the comparison. And so I would just encourage you to really research this. Don't take the financial entertainer's word that cash is better than anything else. Have access to cash, but ultimately know what your money is doing, because our goal is to have more passive income than we have monthly expenses.
That's right.
And so our money has to go to work somewhere. So just eliminating debt will never put money in your pocket. It will free up cash flow, but at the end of the day,
That's not how you get wealthy.
It's not how you get wealthy.
No.
It's not. I mean, the most wealthy people in the world all have debt. They're all using cash from someone else, and they're putting their money to work. And we're just showing this on a very small scale,
Right.
and in a controlled environment. I'm not borrowing money from a loan shark. That'd be a bad idea. I'm not borrowing money from a credit card company. That's a bad idea. I'm borrowing money against something that mine is earning, and I control the environment in which I have to pay back.
Yeah, the goal, I mean, obviously, if you've been listening to this, our whole heart behind this is to constantly bring you new ideas, alternative strategies, and ways to challenge your thinking about the Wall Street mindset and things that are outside of Wall Street's grasp. So hopefully today, that's something new, something you may have never questioned before. Hopefully you'll dig a little deeper. We'll have things in the show notes, like you said, and try to provide you more and more resources. You can continue this journey with us.
Yeah, and by the way, for those of you who haven't liked the Wealth Without Wall Street Facebook page yet, we have been live recently on the last few episodes. And when I say live on Facebook, I don't mean some dinky, donkey, crappy mic and a crappy video camera, and we're here and there. I mean, we've got a legit setup here that looks really good. We answer questions on Facebook Live throughout the episode if any questions are asked. We love involving you as a listener. So subscribe to the show on iTunes, like our Facebook page, Wealth Without Wall Street, for little things like this. And remember, we talked about cash being king on the show. And I think all of us definitely still agree that cash is king, but its queen next beside it is leverage, right? And that is exactly what we are about. So we're going to challenge your thinking on the show. Again, if you haven't already, be sure to subscribe to the Wealth Without Wall Street podcast for all ways to get out of the rat race, to begin earning passive income without Wall Street so that you can do the things that you love to do in life, because we're about getting you there. We'll see you next episode. This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your terms in places you understand so that your wealth will never run dry. See you next episode.